edition of Zach's Live Trader. Here with you always, the bearded boy wonder, Dave Bartosiak. And today, my friends, we've got a premium video for you folks. And we're going to be talking about Wells Fargo, ticker WFC. Now, we had to do a little bit of rearranging and a little bit of scrambling and a little bit of housekeeping because we were getting some bad data from one of our partners. So, kind of threw a wrench into things. Originally, we talked about doing a Domino's pizza feed on Friday. Well, Domino's is not going to report next week like our partner site believes they are. So we will not be doing Domino's. Instead, we'll be doing something else. So I've got some last-minute suggestions from you guys that have trickled in, and we haven't quite found exactly the one. So I will find it out today, and I'll let you guys know all in an email. So that won't be a premium feed, though. That'll be free for everybody. So you'll be able to check that out on our free Zach's Investment Research news site. But, again, as long as you're signed up with me on the email distribution list, I'll make sure you get that. And I think at this point, most of you are. If not, be sure to send me an email, livetrader@zax.com, because that's the only way you're going to get on it, because YouTube doesn't share your email address with me. So livetrader@zax.com. Shoot me those suggestions, and then I'll have your email address, so I make sure you're on our distribution list. So today is a good one because there's a lot of banks that are going to be reporting this week, and among them, Wells Fargo. Now, if you've seen any of my videos in the past, you know that I'm not the biggest Wells Fargo fan. But it's not because of the actual underlying business. It's the characters in the business. So this is the bank that made thousands and thousands of phony accounts for their customers. And then when they were finally taken to the mat about it, the person who was running the show pretended like they had nothing to do with it. So they fired thousands of rank and file employees, and the head honcho was completely just not responsible. Didn't really leave a good taste in my mouth. The other thing I found out was that there were whistleblowers calling HR, letting them know that these were happening, and not only did they ignore the whistleblowers, but they fired the whistleblowers. So when there's that type of egregious misbehavior happening at a company, and there's just so many other companies out there, I just kind of write them off. So left a little bad taste in my mouth, whatever. But you can't let your emotions cloud your judgment, right? So throw all that aside, because when it comes to money, I don't really care. I want to make money going up, going down, going sideways. It doesn't matter. If it's the greatest company on earth or if they club baby seals, I don't care. I'm going to make money on it. So here we're going to talk about Wells Fargo because they're going to be reporting, and a lot of banks will. You got Bank of America, you got JP Morgan, you got all the big banks going to be reporting. Tomorrow is a big day. So I wanted to get this out to you early in the morning here so that you guys are armed, ready to go. Okay, so as always, let's take a look at the price, consensus, and EPS surprise chart here on Zax.com. So if you note the black line here that represents the price, that coincides with the right y-axis. The multicolored lines represent the evolution of our Zax consensus estimates over time. The little green arrows are earnings beats. Little red arrows, there's a couple of them, are earnings misses. Now, what you notice on a stock or a company like Wells Fargo, they're not going to beat by much. They're not going to miss by much, okay? It's not like there's some secret banking product that's going to come out that's going to wow everybody, that we're all going to, it's going to surprise us. Not going to happen. But here's something to note. Stock steadily increasing from 2012 through the middle of 2015. We've got these gaps in these EPS estimates. That's growth right here. Something happened in 2015. These growth numbers are going in the opposite direction. This is not growth. This is contraction. But look at the divergence since election day, really since the summertime. Huge spike in volume, and the stock price has rallied, but, the estimates are kind of in line. After coming down and bottoming in October, now 2017 is finally above 2016's numbers. But if you look at this level of EPS growth, or this level of EPS, not the growth, just look at the EPS, right? Last time you had the estimate that low, you had a stock trading at 49, under 50, right? And then with this much growth, sort of what they were looking for. So if I have a little bit of growth and the EPS is down here, why is the stock trading as high as it is? I know why. It's all about the Trump trade, my friends. So Trump has been good initially for banks, both the large banks and the small banks. Now, the smaller regional banks did better because you had the benefit of the net interest margin, which everybody's going to have because they think that rates are going to tick up. And especially if this infrastructure spending that he proposes goes through, that is certainly inflationary. And then if he has beef with the Fed, they're going to raise rates more aggressively than we thought. So all of that net interest margin beneficial, right? And then the other thing is they think that just it's going to help the overall U.S. economy, and the people who are going to be lending to small businesses are going to be smaller banks and such. So that's sort of the story that we have here. So that's the reason for the rally, the sharp rally that we've seen in Wells Fargo. So over this first couple of weeks of 2017, now what we're left to do following this huge rally is say, okay, is this rally justified? Are we up here for a reason? It's too early to tell in earnings season whether or not it is justified or it's not justified. So keep that in mind when you're looking at this. Okay, so now we're going to look at the detailed estimates page on Zacks.com, see what some of the other analysts are saying. It is right now Zacks ranked number 2 by value style score of B, growth score of F. You'd expect that from a bank. Momentum style score of A, which shouldn't be too surprising. Again, they're going to report before the market opens tomorrow, so we didn't have much time for this one. We had to shift some things around, so I apologize. I try to get you guys, at least a whole day ahead of time. We do that more often than not. Now, here's the interesting part. They're in the top 1% of our Zacks industry rank. So the banks have done very well, and analysts have pushed their earnings estimates to the upside very aggressively to reflect that. Zacks sector rank, they are the top ranked sector in our Zacks sector rank. So as far as the underlying business, the underlying industry, underlying sector, everything it's all hunky-dory right now, really. All right, now let's take a look at the actual estimates, though. Here's where is a little bit of a head-scratcher for me. You have 6 analysts who have dropped their estimate for the current quarter over the course of the last 60 days. Over the last 7 days, 3 have done so. If you look at next year's number, or the current year number, 3 dropped their current year number over the course of the last week. So that's some negative behavior. To the upside, heck, if we're looking at the last week, there's only 1 person who's gone out and upped next quarter's numbers or the current year number. But next year, this is where all the optimism is. Now, sometimes I have a problem with this because it's like, oh, next year, it's going to be great. Don't worry so much about this quarter. Next year is going to be fine. Everything's going to be fantastic. And I think that's what we've already seen in the run-up. So the speculation could already be baked in here on Wells Fargo. But 8 analysts increasing their estimates over the course of the last 60 days is very bullish and aggressive. And 3 doing so over the last 7 days, obviously, is aggressive as well. So we are seeing some aggressive estimate changes going out towards next year. So what you're going to have to ask yourself when you're sizing up a trade on this is the guidance for next year going to be good enough to warrant the move that we've seen since Election Day? Now, traditionally, banks are lower beta players in the game, lower PE ratios, and lower growth. So with the growth kind of not expected for Wells Fargo, that's not the big deal. What's the big deal, though, is 2017 going to look great? Because it needs to, right? They're going to need to tell us a lot of fantastic things to justify that move. So if you think that it will, then you should be bullish. If you're not so sure, then don't be so bullish, okay? So I'm going to give you a couple of different ways to do this. We're going to look at barchart.com as always. Show you guys how to run through this. As always, you just put the ticker up here, and bar chart will pull up just a traditional sort of quote page, a quick little overview that it gives you. And then over here, you can click on options quotes, and then that'll give us a detailed options chain for shares of Wells Fargo. Now, they are going to report tomorrow before the market opens. So the front option here is going to be the Jan 13s. Adjust this to the side-by-side view so you can make a quicker implied volatility calculation. And here we go. So we got our handy-dandy calculator up. The 54s trading 113 by 119, so that's 116 in the middle. That's what it costs you to buy that call. The put 34 by 38, so you're talking 36. To add the two of those, it's $1.52, and this is on a $54 strike. 2.8%. That's the sort of implied volatility that you would expect to see on a big bank around earnings. Not a big number at all, because they're not expecting a big move at all. Now remember, this is in fact a stock that's gone from 44 to 54 just in the last couple months. Okay, so keep that in mind. So even the options market is saying, I think we're getting a little long in the tooth here, okay, on the rally. So keep that $1.50 in your mind. So if we're talking a $54 stock right now, $1.50 to the upside puts us at $55.50. $1.50 to the downside puts us at $52.50. So you got $55.50 and $52.50. That's what you got to keep in mind. So write that down, $55.50 and the $52.50. Okay. All right. Now again, with this 1 day to expiration, it makes it attractive to look at selling premium out of the money, hoping that the stock doesn't move as much, right? So I'm going to show you a bearish trade first, because I think a bearish trade in this case is going to be, it's going to develop faster. And the bullish trade is going to take a little bit more time. So normally I use the same expiration to show you guys these things. I'm going to show you two different expirations. So today I'm going to show you a bearish call that is on the next day expiration. Okay, so remember that number, 55.50, sort of what we were talking about. So I got my, let me bust out my little coloring crayon here. So the 55.50s. So I'd be looking to sell a call spread down here somewhere. So you kind of look through and see where there's going to be some meat on the bone where you can take an acceptable amount of risk. So looking at this 55.50, 56.50 call spread and going short, being on the opposite end of that the bulls would be. Let's go ahead and Cortana's going to help us pull up our calculator here, okay? Because I closed the calculator last time, not paying attention. That's what happens. All right, so if I were to short this 55.50 call, it's trading 35 by 37 right now. I mean 35 by 39, so I could probably get it for 37 cents. And then the 56.50, I want to go long that call just to protect myself in case this thing really breaks out to the upside. Now, I didn't have to pick that strike. I could have gone a little further. I could have taken in more premium, had more money at risk. Whatever floats your boat, my friend. So here, I could buy this 56.50 call for 14 cents. So if I get in 37 cents of premium and I put out 14 cents of premium, that's 23 cents. Now, the amount of money I'm going to have at risk is the difference in the strike prices, which is $1 minus the 23 cents that I have in net credit. So you're talking 77 cents. So my potential rate of return on this is 23 divided by the 77. So almost a 30% rate of return I can get on this in 1 day. That's why I like selling options premium when we only have 1 day to expiration, because it's pretty sweet. And if you don't have the patience to stick around and wait for something to develop, it's right here in your face. So if I'm bearish on this, I think I'm short the 55.50, 56.50 call spread, net credit 23 cents. I got 77 cents at risk. That's what I'm looking at here. I think there's a decent chance of this panning out, because all I need to happen for this to work out for me is shares of Wells Fargo have to close at or below 55.50 tomorrow. Okay, so I just need them to not have a fantastic report and the stock to skyrocket. So that's what I'm kind of betting on here. Now, I do have 77 cents at risk, right? So that's a lot more than I'm taking in, but I think the probability of this happening could be decent. Okay, so now let's look at a bullish trade for you guys, all right? Now, you want to catch some of that post-earnings drift, so don't just go 1 week out, because it's just not enough time. Let's go to the February expiration and see what you can put together here. So if you notice, the strike prices aren't really going to fill in until it gets closer to that period, right? Or is this going to be the 250s? As it gets closer, as the weekly expiration starts to overlap with this, you'll see more prices get in there. But you're still close enough, because you can use this 52.50 call. And if you think that the stock's going to rally a little bit, remember, $1.50 was the top end of the range, so that took us to 55.50. So even just looking at this 52.50 to 55 call spread, you got a different, you have the opportunity to make a little bit of money, but I don't know if you guys are going to like the risk reward here. I just want to spell it out for you just so you can see. So when you're sitting here trying to figure out how to put together an options trade, I want you guys to see sort of the process that goes through my mind a little bit, okay? So 251 to 298. So essentially I could probably get this for 295. So that would cost me $2.95. And if I sell the 55, I could probably get that for $1.40. So minus 140. So in this case, this would cost me $1.55 to put on, and I could make 95 cents on this. Because the difference in the strike prices here is $2.50. So subtract my original investment, that's 95 cents. So if I can make 95 on 155, you're talking a potential 62% rate of return. And all that has to happen is shares of Wells Fargo have to close at or above $55 at expiration. Okay, so that's like a less aggressive bullish trade there. If you want to be a little bit more aggressive, going from the 52.50 all the way to the 57.50. Because if you really think that earnings is going to be a huge catalyst for the stock, you want to give it a little bit of room to run. And this obviously is going to offer up a much better return. So like I said, 295 on the at the money call. And then if you sell the 57.50, the difference here looked like you could sell it for 53. Then now you're talking $2.42 is the amount of money that you're going to have at risk. But you can make $2.58. The difference in the strike prices is $5 minus the 242 gives you 258. Okay, so 258 divided by 242. You'll see here you got the potential for 106% rate of return. Now this is a more aggressive play here, and what you're going to need to have happen is shares of Wells Fargo are going to have to close at or above 57.50 at expiration on February 17th, which is Michael Jordan's birthday, for all you that don't know out there. So anyway, so I've given you a few trades here, but in my humble bearded opinion, which one of these do I believe is going to work out the best here on earnings? I'm going to go with the bearish side of the equation here on Wells Fargo. It's not that I hate Wells Fargo. It's not that I hate America. Don't call me unpatriotic, okay? It's that I think that the banks have ran a lot here. And if you notice, I'm selling an out-of-the-money call spread. So I'm not even saying Wells Fargo is going to go down for sure on earnings. I just don't believe it's going to move to the upside more than the options market is pricing in for one day. And if I can rip off 30% in one day, I will take that 365 days a year, okay? So that's kind of the trade that I'm looking at here on shares of Wells Fargo. Again, you don't have to agree with me. Shoot me your comments, questions, concerns, livetrader@zacks.com. And as always, you can comment in the comment section here on the video because I see those too. And tomorrow, again, we're going to have something for you. I'll figure it out today. I'll shoot out the email to everybody so that you have that. And we're just going to kind of go from here. So thank you guys so much for hanging out with me today, and I will see you soon.